Good afternoon to everyone tuned in. Welcome to the Super Drive Time on Rhythm 95.5. 𝒂𝒊𝒔 here with you. And it is that time of week again. It is Wednesday. And we are going right into our show this afternoon with Naomi, our financial coach / expert. Right? Welcome to Let's Talk Money. So I'm going to let Naomi go ahead and say hello.
Hi, good afternoon, everyone, and welcome back.
Hello.
Yes,
Definitely welcome back. So it's a brand new month. We are in the month of November. We took a look at budgeting.
That's right.
Budgeting strategies.
That's correct.
So this month, November, what are we looking at?
So this month, you will hear us talking about debt and building wealth. And all of that, we need to understand debt first.
Right.
So today we're going to be looking at understanding credit and managing your credit worthiness.
Ooh, okay. Topic. Hello. Okay. So. Tell us, what is credit and why is it important for individuals?
Okay, credit. Credit is essentially a measure of how trustworthy you are with borrowed money. So if the financial institution is going to borrow you money, are you going to pay back?
Okay.
Yes, because when you borrow funds, such as loans or even credit card, because the credit card is not your money, it's borrowed money from the bank,
right.
the lender is expecting you to repay with interest.
With interest, right?
Yeah, let's not leave out that part. With interest.
With interest,
yeah.
Right?
If you borrow from your family member, then that's their decision if they don't want to, have you repay with interest. But when you're borrowing from a financial institution, it's with interest. So your credit worthiness, it determines how likely you are to meet those obligations. In St. Lucia, the banks and other financial institutions may track your credit they will not track your credit score like other countries, but they're going to do credit checks on you.
Okay.
So they will review your financial history with other institutions.
So is that how the lenders or financial institutions assess your credit worthiness?
That's right.
Background check.
That's right. So if you know it, like when you go in for a loan, they might want to know if you have any loans in any other financial institution. What amount is being paid. Sometimes they ask you for statements, like they ask you statements from the credit union, statement from the other bank. So basically, they're not asking you that just to put it on file.
Oh, they're not? Actually.
Yeah. They're asking you that because they're checking, will that person be paying me on time? And will that person be paying me? So they're checking to see if
looking at your history.
That's right.
To decide. Oh, this actually reminds me of a quote. I think the quote went, the best, look, I'm going to put myself on. The best determiner of future behavior is similar. Oh my goodness. You know what? Let's get back to that. Please go. I know it, but I'll come back.
When it comes back to mine, yes, you let the listeners know. Right?
Yes.
And then I think your second question was why credit worthiness matters, because we just discussed what is credit. Basically, we know credit is borrowing money from a lender, or it's a financial institution, and you now paying back with interest. Why the credit worthiness matters? It plays a big role in your financial options. It impacts the interest rates you're offered on a loan.
Okay.
You probably never thought of that.
Okay.
Yeah,
all right.
Your ability to access certain types of credit and even how much you end up paying over time. Especially good credit can save you money and open doors with lower credit limits. Basically, while poor credit can limit your choices. If you have poor credit, if you're not paying on time, it limits your choices. Or if you don't pay well, it limits your choices. But if you have good credit, it will save you money and it will open doors for you. Because guess what? Let's take courts, for example. I think courts is a real great example.
Okay.
If you're always paying courts on time, with your higher purchase.
Right.
Or even if you're somebody you just purchase everything on cash. After a few months, what courts do? They call you and tell you qualified
Oh.
to get the ready cash finance. They call and say you qualified to get a loan of so and so, and it has a maximum of what you qualify for.
Right.
It's because they're monitoring you. They look at your pattern. They see how you pay, whether it's your higher purchase or your cash, and now they want to say you qualified.
Yes. Okay, so I remember the quote. Okay, I remembered it.
Okay.
So the best predictor of future behavior is past behavior under similar circumstances.
That's correct.
So that's basically it.
That's basically it.
Right.
When you're looking at your credit.
Okay. So
A wide stretch you are with your credit.
okay.
So they may not decline you, but for sure they do decline you if they find that you have a little too much credit.
Okay.
If they find you have too much fees, your rent, everything is written. Whether when I give this person that loan, they will be able to pay me within a time frame.
Okay. Okay. I see.
Yeah.
All right.
And then remember earlier on, I also said that they sometimes offer you better deals. So if they realize you're someone, you pay your loan very well, your mortgage or any credit history you have, you pay very well. Sometimes they tend to do bargains for you. So they have some loan promotion going on, it's 6.5%. But because they notice your credit pattern and you are a great customer, they try and get you, a 5%. And originally it was 6.5. So it's good to have a good credit pattern if you're going to have credit, so that the financial institutions can be in your favor.
Okay. I see.
Or else they'll just keep it at whatever you call it, whatever they have it, the promo on at the time, that's what you get. So if it's 14%, it's 14%. But if they note you're somebody with a good credit pattern, even the agent you're dealing with at the time may advise and say, hey, do you want to wait next month or whatever, you might get it. Because they know you have a good credit pattern and you, for sure, you don't want to pay too much interest. They know that. But you need to have a good credit pattern for them to give you this type of information. If you don't have a good credit pattern and you're owing a little too many institutions, you have too much credit, they're not going to be giving you or sharing that type of advice with you.
Okay. Understood.
Yeah.
Okay. So what are some of the financial options that can be affected by your credit worthiness?
Right. So we're looking at make payments on time. That needs to be done.
On time.
On time.
Not the day after.
No. If the day after, make sure you send in a beautiful excuse so that they can know you didn't do it deliberately. Because you want to keep that good relationship with them. That in the event another financial institution is going to come to them and verify or get a statement on your credit, they can put in a word or two for you.
Okay. Fair enough.
Yes. So one of the best ways to build good credit is to always pay your bills on time. This includes whether it's your credit card payments, your loan installment, even your utility bills. Because sometimes they do ask for utility bill statements.
Yeah.
Missed payments can damage your credit history and on reliability to potential lenders. So they look at you like you're not reliable.
I see.
Yeah.
I see.
The second one you want to look at is keep your debt level manageable.
Okay.
Remember earlier on we were saying about having too much debt and then it's like it expands because you have so many. Right. Avoid making having too much credit.
Yeah.
Avoid having too much credit all over. Avoid taking too many debts.
Yeah.
Right? It's generally recommended to keep your credit usually low to show that you manage your finance responsibly.
Okay.
So don't have too much because then it sends a red flag.
So how do you know when it's too much?
Once it's going above your financial means, or when you have that debt, you don't have money remaining for food, for rent, for transportation, then that's, of course, you definitely have too much debt.
Okay, fair enough.
Yeah. So frequent applications can make you look financially stretched, which may be a red flag for your lender. Or like you refinancing your loan and stuff like that every
Right.
time. Yes. You want to be
Right.
careful with that.
Okay, that's interesting.
Yeah,
Yes.
you don't want to be doing that too often. That's
So
for sure.
don't be refinancing over and over and over.
That's right. That's
Okay.
right.
Okay.
Yes.
Okay. Fair enough. We're getting some good tips here. And if you're just joining us, welcome to Let's Talk Money right here on Rhythm 95.5. We have Naomi, our financial and we're here and we're discussing credit.
Yes.
Okay.
Understanding credit.
Understanding credit.
Yes.
Okay, so welcome. Take a seat.
For those just logging in, sorry that you're coming to the end, but we're going to give a nice example that at least you understand what we were speaking about. So
Right.
we're going to give an example with Patricia, our favorite, right?
Hey, Patricia.
So basically, let's say Patricia found herself with too much credit,
Okay,
too much debt.
too much.
Yeah, so she has probably a credit card and whatever. So she took small steps, prioritizing her bills. So you ensure, take out the money for your bills first.
We budget in.
That's right.
Yay.
And then she's paying her highest interest card first. So she has a credit card. Sometimes she have multiple. The one with the highest interest, she start knocking it off first. And then she's going to avoid new credit applications. So she's not going to apply for any loans, any credit at all.
Okay.
Over time, she improves her creditworthiness and gains access to better rates. So as they see you bringing down your credit and you're sticking, you're paying it on time, you're keeping the debt at a level, you're avoiding to apply for unnecessary credit, then most times the institutions come to you. They call you and let you know, hey, we have this deal going on, this deal. You don't just go into it one time, you ask questions, you assess. If you realize it will help you with the better rate, you go ahead with it to bring it down even quicker. So with she doing that decision, it shows that small, consistent effort can make a big difference.
Okay.
So she's starting small, but she's going to be consistent at it. It will make a difference.
This is where discipline comes in
Right.
into play. Okay.
Right. So managing your credit is about responsible borrowing and repayment habits. It's not just about getting access to funds, but about keeping your financial options open for the future.
Okay.
Yes.
Okay.
So that's it for today.
That's it for today. Before you say that's it for today, I want to ask one more question.
No problem.
So, how can good credit save you money in the long run?
So having a good credit, one, when they offer you other they offer lower interest rates to you, it will save you on the amount of interest you'll be paying. Sometimes they offer you deals that can allow you to, they might tell you, okay, if you if they notice a pattern, sometimes they call, like for example, I go courts again because they seem to call people more often. And then they notice you have a good pattern. They will tell you, okay, if you pay off by so and so date, you pay that amount.
Okay.
But if you stick to the higher purchase, then you pay more. So they will come with, most times they give you the offers, or sometimes you go in. If you notice a year, 2 years, you're paying this amount and you feel probably
Like the bill is not going down?
Yeah, you go to them. Most times they have better offers,
Right.
but they make the money on the interest.
It's
so they
true.
won't tell you. But then you go in, they notice you're paying on time, you never delay a payment, and if you're going to delay a payment, you send in a nice little email letting them know, look, this is the situation, COVID hit, they haven't paid us.
Right.
As soon as the payment comes through, you'll get paid.
Right.
You have that relationship with them. They're going to make offers to you.
Okay.
A nice example was like during COVID, persons that was consistent with their insurance payment. For some insurance companies, which I did experience, they were like, no, you don't need to cancel your plan. You just need to pay that for the next year or two. When things get back to normal, then you go back to your normal rate.
Oh.
They actually have better rates, but they never tell us.
Okay.
But then they offer it to you if they notice you have a good credit pattern.
Okay.
Yeah.
All right. So I think we've learned a few things today. We got general understanding about credit.
That's right.
Right, and we understood the importance of creditworthiness.
That's correct.
Okay, and the benefits
on
of
time.
the benefits of.
That's correct.
All right. So is this everything that you have for us today?
That's
you want to
it
give
for
us a little
today.
peek into next week?
So next week we will be going into more of managing debt and building wealth.
Okay.
So we'll be diving really deep into this topic.
Okay, great stuff. Now, guys, if you cannot wait and you would like to get this information, you want to know exactly what Naomi has to say about this, of course, you can reach out to her through her platform on
IG.
Instagram,
Yeah.
Naomi Numbers, right?
Yes.
And there's also Persistent Accounting. She can be reached at both of those. And do you have a number that we can reach you at as well?
I prefer to send emails.
Okay, so what would be the email?
Naomi's numbers at gmail.com.
Okay, great stuff. So Naomi, as per usual, thank you so much for spending this time with us. Guys, this has been Let's Talk Money.